What's going on, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to do some stock analysis for AMC because I've gotten a couple requests for this, as well as this stock is down over 37% today, and it's still falling. The reason it's falling is because it looks like they are planning to sell up to 40 million shares of common stock, and they say it's to bolster liquidity and repay debt. So it sounds like they're using it for they're putting it to good use, which is a good thing. But if you're, prior to today, if you were a shareholder of the stock, that's really bad news because now the stock is down 37% and it doesn't look good. So now the market cap is down to $1.3 billion. If we take a look at some fundamental analysis for this company, the revenue for AMC has not been too consistent, which is something I don't like to see. From 2010 to 2016, it was pretty much flat at right around the $2.5 billion mark. Then there was a couple years where it spiked, and then the pandemic year, we had a huge drop, and they've slowly been recovering. Now, as of last year, they did $3.9 billion in revenue. So you could look at that and say, okay, there's some improvement. But what I see is a lot of inconsistency, which means I'm going to give that one a no. Now, if we look at net income, it's no better, really. It's pretty much consistently negative, and they're losing anywhere from, $1 billion up to $4.5 billion. They haven't made a profit since 2018, and that was only $110 million. And not to mention, once we get to this company's balance sheet, their balance sheet is really bad. That's part of the reason that they're selling off all those shares of the stock, which we're going to kind of get into the math of that later. But as for the price to earnings, since it's money losing company, there's no PE. So the price to sales is a 2.5 roughly. Well, 2.5 before today. So right now it's probably more like a 2, if not below a 2, because let's see, we're looking at a company that's $1.3 billion. And this company does how much in revenue? So yeah, I mean, it's looking at 3.9 billion in sales. So it definitely looks more attractive now. However, it looks like, oh, I'm sorry. Wait a second. I'm sorry here. I messed this up. Right now, it's a price to sales of a 4. The 2.5 is what it trades at in the past on average. So here we can see it's been all over the place. 2015, it traded from a 5 to a 7. And then for this period of time, it was around a 2.5. And then it's come all the way down to a 1.3. But where we're at, and really it's traded all the way up to when it was a meme stock, it went to a price to sales of 161, which is insane. And then the last year or so, we've seen it come down right now to about a 4. That was of yesterday, as of yesterday. But before that, it was trading at on a 10 or an 11. So there's different ways to look at this. I guess a 4 is not that bad for AMC, especially now that it's down 37%. It's probably more like a price to sales of a 3 or something like that. Is this company innovative? So we can change this to yes, if I want to be generous. Is it innovative? No, I would say that's kind of like the innovative companies in this space are kind of what's hurting AMC, because ever since you could stream stuff at home and watch, newer movies at home versus going to the theater, that's kind of the innovative thing in this industry. I still think people are gonna go to the movies. I mean, I still see people go to the movies, so I don't see that as the end all be all for the company. But as far as innovation goes, unless they come out with a streaming service or something, I mean, they make their money from people going to the theater and buying popcorn. So I don't know. I'm not seeing too much innovation there. Strong market share, yes, definitely. It looks like it's about 36%. So very strong market share. Return on invested capital is, of course, a negative. Equity is, here we go. This is where it gets really ugly here. We go to the balance sheet. We can see that they have 9 billion. Let's see. Let's go to the more updated 8.6 billion in assets and 11.2 billion in liabilities. So not very good. The equity has been over negative $2 billion now for over a year. And if we do the math on this, if you think about if they sell 40 million shares at a price of $8, because the stock's $8 right now, that's going to give them, or let's say $9, it's going to give them a little bit over $300 million. So that $300 million, if they use all that money to pay off some debt, I mean, that's going to help, right? It's going to help, but we're still looking at a deficit of negative 2.5 billion. So they got they have a ways to go before they pay off that debt. But I think it's good that they are using the money to do that. It's just they kind of are in a tough position. They're going to need more cash to dig themselves out. The equity is not over 15% because it's negative. The share count, this is another really bad sign for this company. And let's see. And now it's even going to get worse because now they're selling more shares. So look at this. We have 100 million shares when things were normal. Then that number more than doubled. Then it nearly 5x, it more than 4x to 900 million shares. So that's nearly a 10x in the number of shares. That's a 90% dilution rate in just 2 years. And now we're down to 4.7 million. So this company is just all over the place. This is not good. This is not consistent. That's not what I like to see. Consistency is a very important factor to look for in pretty much all these different graphs. You want to see consistency. Balance sheet is not good. Profit margins, not good. Cash receivables, yes, because they have a little bit and they make no money, so it's better than zero. No dividend. The company is from 1920, so it's over 100 years old now. And as you might imagine, the free cash flow is just as bad as the revenue or net income. Free cash flow has been consistently negative, with anywhere from negative 700 to negative $1.3 billion. So I wish AMC the best. I hope they figure out something here. But they're definitely not in a good position. It definitely doesn't look, the valuation is down, so that's good, but the company's not being ran very well. So this will be an interesting one to watch. We'll see what happens. We'll see if this stock gets bought up. We'll see if AMC can do something to help turn the business around, but that is all for today. So thank you for watching. I will see you next time.